Hello, this is Carl Gong again, and I'm going to go into the Introduction to Technical Analysis Part 2. So what I'm going to do is go through a portfolio and show you how the technical analysis I use apply towards a portfolio. Now in ETrade, they have a tools called ETrade Pro, which allows you to put multiple screens on a single screen so that you can see various things such as the chart, the news, and also other watch item lists, etc. And also they have capability of even putting them within another window. So you can have multiple windows with multiple screens on them. But this particular window has essentially all my accounts listed here. And you have at the top a header with various information such as a stock you want to look at with all the parametric information that you might be interested in. And at the very top, you can see you have your tools, quotes, tickers, and trades you can also look at. So again, there's a bunch of different tools you can look at. Most of them have the accounts, such as the first one. You have your charts, you have Excel managers, research, of course. So there's a lot of items here you can take a look at. They even have a strategy scanner to look over the particular stock and also sector analysis work. So let's go back and take a look at this. So right now I have my accounts opened up here. I've got my Roth account listed here, and I set up multiple views, and this is custom view number 2 that I set up. And in this case, you see this other information here. You can take a look at other things you can do, such as buy and selling. You can change the columns, change the display, and many different things. You can export your position. So this is very useful stuff. Exporting position can be exported into obviously a CSV file to be imported into Excel. And the importance of link. So link is basically allows you to link multiple windows to one window. So you can see this link 1 and this link 1 as well as this is link 1 and this is also link 1. So in this portfolio, if I double click on this or even click on it, you can see the chart now goes to the EEM ETF. The news also brings it up to EEF, but the Dividend Aristocrats does not change because it's also essentially another portfolio. So this allows you to quickly look through each chart and see how they're doing. And also the columns again is manipulatable, so you can change things around as you want. So let's take a look at the various charts. So let's start, since I sort this by market value. There we go. So the first thing I have on top is VMFXX, which is a money market mutual fund. And this is part of my cash reserve. You can see I also have a cash at the bottom. So combination of 251,000 and 23,000 is 270,000, which is about half the portfolio. Now, of course, it probably didn't start it off as half, but probably closer to 700,000, and with a little loss of about 160,000 or so. That's about maybe 20% drop. Again, that's less than what the market probably did. The market probably dropped down about 35%. So I'm down basically in this particular portfolio about 20% or so. Okay, so again, let's look at, go back up. So Boeing. So I've owned Boeing. In fact, in this position, I've owned quite a bit of it. You can see I have 65,000 in value right now with a current loss of 31,000. So my original cost is 96,000, but you can see it was up 16% today, so it gained 9,000. So I got a ways to go to get back even, but this is a long-term holding. The other thing you see here, I have the dividend yields. Now, it's currently reading 0 because as of part of its bailout or its loan borrowing plan with the United States, it's going to cut salaries for the execs as well as cut dividend buybacks, or I should say cut stock buyback, and also cut out the dividend. So that is part of the conditioning for it to receive the assistance it needs to sustain itself through this coronavirus downturn. So it's already reflected in here. And you can see here the price drop of the stock. And this is a 3-year period. So if we shorten the period to, say, 6 months, you can see it was running smoothly through most of the time, but only recently, as the coronavirus hit, that it started to drop even more. And it took a fairly steep decline. As you can take a look at how far it's dropped, you can see the faster MACD is now just crossing upwards through the slower MACD. So this is at a very severe downturn, and you can see the value of minus 48 is extremely rare and extremely deep. So I had expected it to return. So I have purchased some Boeing in the meantime. So let's take a quick look here. These are my share holding. Okay. Best thing is to go to transaction history. So in the transaction history, you can see on the 18th, I bought 100 extra share of Boeing at 102. So I have been buying some more to add to my position because it is a long-term holding. And you can see there's been a lot of things I've been purchasing over the last couple of 3 weeks or so. So I had put a lot of money, more than 50% of the portfolio in cash, and was able to take advantage of the drop, and I still plan on buying more things. So essentially, as I point out before, because of the no cost transaction fee in purchasing of stocks, you can go as small as you want. My lot right now runs between 3 to 10, 11, $12,000 each. So I'm doing a lot of buying, but it's not costing me anything more than essentially the price of the stock itself. So it does allow me to purchase more things. So you can see, for instance, I bought the Simon Property Group, and I thought at 120 it was quite a deal, but you can see it's dropped almost 50% from there, so I picked up more. So it does take a iron stomach, if you want to call it that, to do this, but as you do more and more of it, you become more comfortable with what you're doing. And if you know what you're doing, it's less of a risk, but it still is a risk. And what you want to be sure you're doing is buying good companies. So the key is identifying good companies and buying them at a discount. And since I've known Simon Property for years, I've been following it for a long time. I was interested in it, and as it drops down, I obviously picked up positions in it. So if you look at the Simon Property Group again, you can see I'm down roughly 5,000. My total original purchase was like 24,000. So I'm down about 25% maybe. Yeah, closer to 20, yeah, close to 25%. So I'm comfortable with that. It's long term. It does have a surprisingly 13.45 yield. And being a REIT, I'm not sure if that's going to hold up, but we will have to wait and see. There is a possibility that it has earning impact also due to the coronavirus, so the yield may not be 13%. Another property I owned that I liked a lot was Ventas, and it's also dropped significantly. And I've only got a small loss, about a little over 10% on this, 14% roughly, and it's showing about 11% yield. And again, I've got multiple purchase of this also for the same reason. So if I look at the transaction history, you can see here's the purchase on 3/18 of 200 shares, and another 200 shares on 3/17. So 17 and 18, I did a lot of purchase, as you can see, and I was able to lower my cost value as a result. But they are risky, and at this point, both Simon and Ventas did not do very much over the last few days. And again, I'm looking for this long term. So let's go back to B of A. So you can see B of A is at like minus 48. And this is showing your 6 months. If I look at it a year, it has nowhere ever been this low. And in fact, looks like minus 5 is probably minus 5, minus 7 has been the typical range. And if I drag this off to the right here, I'll see further back in time, and you can see this is 2019, and you can see there was a 10, plus 10 and minus 10, a big drop here. So at this point, you can see the price here was at 422, and the price down here was like 390. So that's about a 5% drop. But you can see this was indicating a potential buy point, but as you can see, it never crossed back over zero. So it's kind of like a false purchase, but if you hung around, it will reach another purchase price here, purchase point, I should say, here, and that's roughly 354. So here it was at 380. You got another buying opportunity at around 350. And at that point, it did move up and higher and into the positive range. And as it moved on, again, it basically moved upward gradually or stayed fairly flat. And again, you get another minus 10. So it looks like 10 would have been a typical range that would be reasonable for buying, plus or minus 10. So buying and selling. But once you get to the current date, you can see it exceeded that minus 10 significantly here, and it was still down on a downward grade. So this is where you're trying to catch a falling knife as to when it stops. So by using the MACD, I can get a better indication of when to buy by when it comes back crossing over where the MACD faster line is crossing over the slower line. And at this point, it looks like it is just crossing. So it indicates kind of that it's okay to get into the Boeing, but you probably would have known that also from the recent transaction of Boeing being promised part of the $2 trillion act that's being funds that is being made available to a lot of companies. Next stock you can take a look at is IBM. So IBM I've watched for a long time, since I've also held it for a long time. It had fairly good dividends. So again, it's a 5.74 dividend right now. And that should be very attractive to a lot of people and lots of institutions. And I believe it's a solid company, and it has made a change after they purchased Red Hat. So part of buying the stock is knowing the story of the company. And if you're well aware, Red Hat was growing tremendously over the last 10 years or so. And part of IBM's idea was to try to get into the cloud and have a bigger footprint. However, they have not been growing their cloud-based software very much. And maybe it's at 10, at most 20% growth rate, which is small compared to many of the other software companies that are out there, including Microsoft. So because of that, this has basically been a dead company. But once they acquire Red Hat, you could probably have guessed also that the CEO of Red Hat would eventually be taking over, since that is the direction IBM wished to go in. And their last earning report showed very promising results. So I'm fairly confident that Dividend is safe and IBM is heading in the right direction. And you can see it's gone down to -10, and it also is showing the golden cross point of basically the faster MACD crossing upwards and across the slower MACD. And if you go back in history and time again, you can see there's a couple of points here that it went to -8. And at that point, you can see it was also somewhat of a buying opportunity with the price at about 120. And it eventually moved up into the 140 almost. So again, that is maybe a 10% gain or so opportunity for buying. And if we keep going further back in time, you get into the -3 range here on the MACD and +3, so not as severe. So the buy indicator probably is stronger when you get to the -10 range or so. So at this point, if you go back to the current time frame, we're in the -10 range, so that should be an attractive point to be buying. So that's why I picked up another 100 shares or so. Apple I've had for a couple of years now, actually a little over a year, and you can see it's gone down to the same thing. So many golden crossover right at this time, which is why I'm presenting this video, so you can use it as a learning tool. And if I were to look at the past, let's go backwards in history. You can see back in this time frame in December 2018 and January 2019 that you've got basically a bottoming at roughly -9. And again today, right now, and if you had bought then, you're talking about the price of 150. So you could have been in the 150s in the purchase here. And of course, as of now, it's in the 250 even at this date. And you were up as high as 300. So from 150 to about 300 is about 100%. And I basically had purchased the Apple roughly around that earlier crossover point. And this indicates a current, a good time also to be buying Apple. If you ever want to buy Apple and you haven't, you can get back in right now. Next one I have here is EEM, and this is essentially the ETF for the what do we call them? The foreign market, essentially, the Far East market. So the EEM in this case, you can see I'm on a positive gain because I've only purchased them recently. So again, you look at your transaction history, and you can see I bought EEM on 318, 200 shares, another 200 shares on 317, and is there any other one? Not recently, so let's go back to position. So I probably started out with 200 shares and now I'm up to 600 shares. So I bought another 400, and you can see it's up 3.79%. And the reason I bought EEM, the one major company is Alibaba, is 7% of this ETF. So I'm essentially buying Alibaba, but I could buy Alibaba separately. And if you know your foreign stocks and you know Alibaba is the main driver, you could have just bought Alibaba also. One of the reasons I did was it has a pretty good dividend, and basically, since it is a ETF, it has multiple stocks, so I'm not strictly tied to Alibaba, but I have a strong sensitivity to it. So again, I just discussed Simon Property, and here you can see that was sitting at -20, and it has not yet crossed over to the positive or crossed the golden cross yet. So if I go back in time, you can see it runs in the -3 and sometime -5. And here's a buying opportunity when it was down at -5. But pretty much fairly flat. And the activity is between +3 and -3 on the MACD. And basically, Simon Property was fairly flat most of the time. So it's very unusual to go beyond -3. So at -20, it's screaming a buy for me. And it gives me a better reward to risk at this point. At this point, I may not care about the dividend as much as long as the business still exists and they come out of it. I believe they'll be in good shape. So partly because it has a very good management team, and that's part of why I purchased it. Simon Property Group is one of the biggest and has usually been well financed. And Ventas, as I mentioned before, is a senior housing, and Deb Cafaro is a well-respected executive, and because of her leadership, I followed this stock for a while, and I had bought and sold it, and right now, like I said, I'm down just a little bit on it, and again, it has a same crossover here, and nowhere else in this history has it ever been this deep in the hole. So again, I'm looking at this exogenous event as being a buying opportunity for a high quality stock. Centos is basically a Medicare play, and you can see it's up almost 8% today, and basically I was neutral on it. I had purchased it a while ago, but you can see it's basically like -3 right now, and it has been around a while, and you can see it has some -3 excursions, so it's typical excursion. So because it's a Medi-Cal play, it shouldn't be affected by the exogenous events of the coronavirus, since activity is still required for Medi-Cal. And TJ Maxx, I've taken this opportunity to create a position in it because it's a company I followed for a long time. TJ Maxx also owns Marshalls, and they are one of the major discounters that are in basically a good business. And if you have a wife, or if you are a woman, you probably know about them very much and very well. So I saw that it went down quite a bit, and I decided I'd go ahead and start a position in it since I have always wanted to own it. And again, you can see it's down at -5 right now, and just about to make the golden cross also. And if you look in the past history, -2 seems to be as low as it gets. So if I stretch it out more, go back even further, yeah, I'm going back almost a couple of years now, and I have not seen any case where it's been this low. So I am taking this opportunity now to pick up positions in it. Beth Bath Beyond is a new one. I was prepared to play it as a turnaround, but the coronavirus hit made a bigger hit on it than I thought, and I'm down roughly almost 50%, say 45%. So other things I've taken advantage of is AMD, and you can see AMD also has taken a bit of a hit. It was down at -3, and it's actually already gone through the golden cross. So if I look back in time, there has been other times when it's gotten close to -3, and you can see this was a good buying opportunity. You'd be purchasing at around 20, and you'd be up over 30 as a result. So it definitely was a good buying opportunity. And if I go back even further, you see another buying opportunity here, and this one you would have purchased again around 20, and of course it moved upward from there as much as 20% in a matter of months. So AMD, I know, is a good company, and at this point has a better chip than Intel has, and it seems to be dominating in the data center and so on. So that's why I start a position there. So you can see the things I've done and how quickly I can look at this. Another thing you can see, I've also got a Dividend Aristocrat 2019 here, and I can now click on these and go through them very quickly. As you can see, this is Roper Industry, and you can see it's like at minus 20 here, and it's down quite a bit. And what I want to show was I can track through all of these very quickly, and you can see they all show pretty much the same thing. So that's why I say you can almost buy anything at this time and you'll probably be okay. I did this because of the dividend yield, so let me sort it by yield. So unfortunately, oil has a double whammy going on because of the war currently going on, but you can see it's also making a cross. So it may be signaling that it's at a point where you can start buying oil again. Chevron, AbbVie is the one that I also picked up. One of the reasons I did is it is purchasing Celgene. So it has a tremendous future product line that it can implement, and this is just the beginning. It also has a high dividend of 6.4%. So definitely AbbVie had been on my radar for a while, and I have purchased a bunch of it in different part of my portfolio. And finance here is Benjamin Franklin Resource, and it's just barely in -2 range, so there was a couple of bad low points that would be potentially buying opportunity. And I don't see very much else going on. So it looks like to me you could pick up Benjamin Franklin or Franklin Resources. And there are many other things here. Nucor, 3M. 3M again has taken a big hit, and it has had multiple big hits. There's another one here, and you can see it has taken a dip. And it is obviously impacted by international. So the other thing I want to point out, I can then take this and I can go ahead and export it to CSV. And once I export it to CSV, I would have the symbol, last trade, annual dividend, etc. And I can then read this into my spreadsheet here. So here's my spreadsheet, and you can see I have all the same thing, the symbol, last trade, dividend. And I can create I can name the space, and then I can go ahead and input it into my analysis. So I built it up so that I can import the price of essentially the symbol. So A2 is the symbol of ADM, and I can use a VLOOKUP using dividend 2019 data. And of course, the second column is the price. So I can basically pick up the price here. And I pick up the annual dividends here. So I can calculate the yields. I can also use this to calculate the PEG. And the growth rate, I make the assumption. And of course, I take the latest earnings. So for 2021, $3.60 is the latest estimate on that earning. If I plug that in, you get the PEG automatically. So all you have to do is update this maybe once every week or every couple of weeks so that you can get the latest price and any change in dividends. So take a look at the yields and look at the PEG to decide, has it reached your buy point now? So this is my quick look at application of using the MACD and how I've been using it to purchase things. And at selling, you can also do your own selling so that when it reaches the top, you do some trading, but I wouldn't sell everything off. I would go ahead and take some profit. Again, things will oscillate back and forth, up and down, and so you want to take advantage of these price variations. So again, you want to buy low and sell high. Okay, I hope this was useful, and good luck on purchasing stocks in the market, and today's a good day to start doing so.